So how much can you make selling options with Questrade? So in this video, I'm going to go over my trades for the last week. So week ending November 6th. I'm going to go over my actual trades, actual results. And then I'm going to give some different scenarios. Do a little bit of tweaking. What if I let them go to expiry and did not close them before expiry? What if I did 2 contracts instead of 1 contract? And what if I did 5 contracts? So most of my option trades are credit spreads, mostly put spreads. So I'm going to go over my trades for this week. So obviously the past few weeks we had the elections. So there was a lot of volatility. A lot of people prefer not to trade through elections, but when I see stocks dropping, it's hard for me not to take advantage of that and sell a put credit spread that's out of the money. So first of all, let's look at my total profits for the week, net profit. So net profit US for the week is $589. How much capital did I use to generate this $589? So I have about 28 trades, and let's say on average I use about $400 of capital per trade because I do 1 contract. So basically it's going to be 400 times 28. So it's about $11,000 of capital that I used to generate this 589. So if we want to look at return on capital, 589 divided by 11,200 is 5.2%. So not a bad weekly return. Things could have been much better, and I'm going to show you. But let's first go through the trade. So Wednesday, October 28th, so the previous week, I had opened a SPY put spread expiring Wednesday, November 4th. So one day after the elections, at a 315, 310 strike, collecting $1. I was able to go that far and collect $1 because the SPY, there was a day where the SPY dropped hard, which was on Wednesday. I was able to collect $1. But I closed it early. I closed it for 50 cents before the elections and gave me a $50 profit, gross profit, but after commissions, it's $37. So this column is my gross profit, this column is my commissions, and this is my net profit because of commissions. But definitely if I had let this trade go to expiry, but on November 4th, it was definitely above 315. So this would have expired worthless. I didn't have to pay 50 cents to close it. It would have been the full profit of $100. So Zoom was a 465, 460 put spread. It started off a 465, 460 put spread, and then Zoom dropped all the way down to 440. So what I did when that happened is I sold another put spread at 430, 425 when Zoom dropped, and I sold a call spread at 495, 500 to mitigate this put spread that 465 that got breached. And then sadly what happened is Zoom ended up going higher and my 495 call spread got breached. So the 495 500 call spread is the one that got breached, and the 465 460 put spread ended up being safe. So I ended up closing the trade early on Thursday. I didn't want any trouble with the call spread on Friday, so I ended up closing it for $2.55. So I took a loss on that one. So it gives me a net loss of $95. I had an NVIDIA put spread. So most of these, as you can see, were open on the day where the market dropped hard on Wednesday, and some of them on Friday as well, last week when the market was dropping hard. So NVIDIA at 475, collected $1, closed it for 35 cents. I closed it too early apparently. Adobe, collected $1, closed it for 45 cents. BIIB, that was a good trade actually, 205, 200, collected $1, ended up closing for 6 cents. The stock went up like crazy on Wednesday, I believe, or Thursday because of some announcement. MasterCard was an earnings trade that went bad. I tried to save it. I saved it. I closed it for less than $5. So I closed it for $3.20. I collected $1.80. So it gave me a $155 loss. If I had held it till expiry, I would have lost less. I could have closed it for about $2.50. UPS, I closed it early, made a profit of $61, but I could have made full profit if I let it go to expiry. Boeing was an earnings trade that got tested on the put side, so I sold a call spread too close, and then the call spread got tested. So I ended up losing on this trade because of the call spread that I was using to mitigate the put spread that got breached. So once again, the call spread keep getting to me. So that was a $229 loss. Visa, same thing, same exact thing as Boeing, $265 loss. Amazon was a put spread, collected $1, closed it for 29 cents, $58 profit. Netflix, put spread again, 460. Put spread, collected $1, closed for 30 cents. Obviously, could have let it expire, all worthless. All these could have expired worthless. Obviously, it's hard to not take advantage of the run up, not knowing that you don't know if things might come back down again quickly. with the crazy volatility of elections. So I ended up buying back to close them. I still made some profits, but I could have made more profits if I just let it run to expiry to November 6th. Shopify, once again, from $1 to $4. Lululemon from $1 to 35 cents. Spotify from $1 to 48 cents. This is sad because this could have been a much better winner. Amazon $2 to 65 cents. So made a profit of 122. This could have been a full $200 profit. PayPal 90 cents to 45 cents. This could have been a full $90 profit. It was an earnings trade. It got 175, got tested, but then it just jumped up to 190s and even above 200. So that instead of making $32 profit, could have made a close to $80 profit. So all these add up. All these small profits that I missed out on could have been way more. Wayfair, same thing. $1 closed it for 25 cents. That's not bad. I mean, $63 profit. Tesla $1, closed it for 50 cents. Definitely closed it too early. $37 profit. Should have been easily $85 profit. So as you can see, it really adds up these differences. Fiverr was a put spread after earnings. Finally closed it for 42 cents. Closed it for 42 cents. Google was an earnings trade that I rolled that I should not have rolled. 79 cents. Initially it was 89 cents. And then I rolled it for a debit of 10 cents. So that's why I've got 79 cents. I closed it for 35 cents this week. So a small profit of $31. So these were good here. All these here were earning trades. So Take-Two Interactive, Peloton, Square, Trade Desk, and Roku. They were all put spreads that I placed on Thursday at 3 o'clock while driving. Take-Two Interactive collected 84 cents, closed it for 23 cents the next day. Could have gone to expiry, would have been much bigger profit. Peloton 80 cents, closed it for 23 cents. Square collected 83, closed it for 5 cents. Trade Desk collected $1.65, closed it for 5 cents. That's a good one. $147 profit after commissions. Roku collected 90 cents, closed it for 5 cents, so $72 profit. Amazon and Netflix here, these ones were rolled trades from October 19 and October 22nd. I decided to just close them for a very small profit, as you can see here, $33 and $19. Just because I had sold call spreads against them, and now I was afraid that the call spreads would get tested. I had until November 20th, but I don't like to get tested on the call side, so I just decided to close it and just avoid the headache and really stick to put spreads and try not to manage with call spreads. Electronic Arts was a put spread for earnings as well, so I did them at the same time as these ones here, Thursday before market close. It was a 123, 118 put spread. Obviously, it got completely breached. I think Electronic Arts went to 115, 114 during the day, but I did nothing. I waited, and towards the end of the day, it reached 120. What I ended up doing is I sold the long put. So the 118 put had some value in it. It had 60 cents of value. So initially my put spread, I collected 84 cents. And then I sold the long put for 60 cents. So I got it, 60 cents came into my account. But then I decided to keep the short put of 123 and roll it. So I have a naked put right now on Electronic Arts that I'm just going to keep rolling until the stock recovers above 120. So I rolled down from 123 to 120 strike. I paid $1.20 to roll down, but that's okay. I'm still up 24 cents on this trade. My goal with this trade is not to make money, but just not to lose money. So I just want to come out of this break even. Otherwise, if I had to close it on Friday, I would have closed it for about $4. So that would have been a $300 loss. So I'm just trying to avoid not losing $200. So my goal is just to break even. So my goal right now, or what I need right now, is I need EA to stay above 120. Above 120 come November. Actually, this should be November 13 because it got rolled to November 13. So I just need EA to be above 120 come November 13, and I'm out of the trade, no problem, no loss. All right, so I told you my net profit for this week was $589. Now let's look at some different scenarios. So first of all, without changing anything, so the exact same trades. What if I did 2 contracts, which is something I want to do. I should be doing 2 contracts so that the commission, if you watched my video this week regarding commissions, that they can actually be cheaper with Questrade if you do more contracts. So just to make commissions cheaper per contract, it would make more sense for me to do 2 contracts as opposed to 1. So let's see what would have happened if I kept the exact same trades, same entries, same exits, but just did 2 contracts instead of 1. So this one here was already 2, so I would double it. So this one would be 4, but everything else would be 2. All right, so my net profit, if I did that, for the week would have been 1,456. So you would think that I doubled my contract, so I should be making the double of 589. So it should be around $1,100 or $1,200. Instead, my profit would be 1456. That's because commission has less of an impact when I'm doing more contracts. So if I had just done the exact same trades but did 2 contracts, my profit for the week would have been 456 net US. Now, what if I would have done 5 contracts? Now, I don't think I'd be doing 5 contracts, but just for fun, let's just see. 5 contracts is something my account can afford, but it's just not in my risk tolerance, so I would never do 5 contracts. But just for fun, let's just see what would have happened if I did 5 contracts instead of 2 contracts. And wherever I did 2 contracts, then it would be 10 contracts. So I'm going to put 5 contracts everywhere. And then I think Visa would be 10 contracts because it was 2.5 wide. That's why I did 2 contracts instead of 1 contract. So in that case, my profit would have been $4,000 net US if I had done 5 contracts instead of 1 contract. So really mind-blowing stuff. The exact same trade, same exit, same entry, same exits. Now the other scenario I want to cover, if I go back to my 1 contract, which is what I did, what if instead of closing these trades, what if I just let everything go to expiry and just close it at the end of the day? So, or even let it expire worthless if possible. So this one here would have been, so right now, so remember, I'm at 589 this week with my actual entries and my actual exits and the actual number of contracts. I'm at 589 US. But this time we're going to keep the same number of contracts, but I'm just going to not close any trades early. I'm just going to let them go to expiry. So this one here, the SPY would have expired worthless. Zoom here, if I had done nothing and I did not sell a call spread, this would have been a winner. But because I sold a call spread, and let's say I had taken the call spread to expiry, I would have had to close this for $5. Now, NVIDIA would have expired worthless, so 0. Adobe would have expired worthless. But see, that's the thing. Adobe went all the way down to 440, and then it came back up. So it doesn't sort of make sense to want to close the trade just in case, because you saw your put spread your strike almost get tested. So when you see a chance to close it for a profit, I feel like it's normal to take it just to avoid turning the trade into a loser, especially that you're going through elections. You don't know what's going to happen, right? So anyway, so BIIB was expired worthless as well. MasterCard I would have been able to close it for 2.5 if I had gone to expiration. UPS would have expired worthless. BA would have been $5 if I went to expiration. Visa would have been the same thing. Amazon would have been 0. Netflix worthless. Zoom worthless. Shopify worthless. Lululemon 0. Spotify worthless. Amazon again worthless. PayPal worthless. Wayfair worthless. Tesla worthless. Fiverr wasn't expiring November 20th, so I'm going to keep it. Google also was November 20th, so it wasn't last week, so cannot expire worthless. TTWO, this one would have expired worthless. Peloton worthless. Square worthless. Trade Desk worthless. Roku worthless. And this one is not part of it, so I'm just going to keep it as is. So same amount of contracts. The only thing that changes is I went to expiry instead of closing early. I would have made 1164 if I did that. So from 589 to 1164 if I didn't close my trades early and if I just let everything go to expiry. Now, just for fun, if I had done 2 contracts, would have been a $2,500 week if I had gone to expiry and done 2 contracts. So really, I'm glad to see that I'm happy to see what's possible. It is a little disappointing I didn't do these trades and I didn't go to expiry, even though I've done a video back testing showing that going to expiry is profitable than managing in the case of weeklies. But it is physically hard to do, even though in theory I might know that, but it's just in practice it's hard to do. It's just nice to see what's possible out there. I mean, with about $11,000 of capital, could have made about $1,200 net profit for the week. So almost a 10% return on your capital. So that's how much you can make selling options, even with Questrade's crazy commissions. I think for the week I spent about $388 in commission. So actually, let's look at my gross. So my gross profit for the week is $978, but my commission is $388, leaving me with a net profit of $589. So kind of hurts. Commissions is kind of high, but it is what it is. I mean, Questrade is a platform that I'm comfortable using. I do acknowledge that interactive brokers would be way cheaper, but I find the interface harder to use. Plus, I wouldn't be able to place these trades because this is actually capital that's being leveraged from my TFSA. It's not even capital that's in my margin account. So these profits would not exist if I had gone to interactive brokers because I don't even have equity in my margin. All right, so these were my option trades for the week, and that's how much you can make selling options with Questrade. So if you have any questions, leave in the comment section below. Like always, if you're gonna open an account with Questrade to trade on the stock market, use my referral link below to get $50 in free trades. Also check out the other referral links below. If you enjoyed this video, click the like button, share with a friend, and subscribe to the channel. Thanks for watching.